welcome back. In this session, we're going to learn about BECK'S emblem. It is an evolution from Gann's emblem. Gann had the emblem of the circle, square, the triangle, and if you look inside the GARTLEY trading method book that I wrote, look in the appendix and you'll see a description of what we thought was Gann's emblem actually should probably be called the Jones emblem, because Billy Jones came up with the logo of the circle, the square, and the triangle all used together. Everyone refers to that as the Gann's emblem. But that emblem evolved, and it's been very useful, and it led me to the discovery of some really fascinating angles that come out of the BECK'S emblem. So that's what we're going to be looking at today, and we're going to be using those angles versus the Fibonacci lines that we've used in our vertical market geometry. So let's get into it. And by the way, please do not broadcast this information. Don't record it and give it to other people. You've paid good money for this. Keep it to yourself. Let's keep it within the geometric trading community. So as I mentioned, it's in the appendix of the GARTLEY trading method book. I outline how to draw the emblem, starting with a simple compass and drawing a circle, and then you do the Vesica Pisces, etc., etc. But we're going to look at, first off, in the session, the discovery, how I discovered it. Then we'll be looking at the constituent parts of the emblem itself. We'll be looking, starting with the dyad, which is the circle, and then the tetrad, which is the square inside the circle, and then the triad, or the triangles related to it inside the circle. We'll also go over the relationship that it has with the GARTLEY pattern. This is really going to improve our GARTLEY pattern trading. And then we're going to wrap it up by looking at using some software to find these GARTLEY patterns and use the BECK'S emblem versus the vertical market geometry of the Fibonacci ratios to identify support and resistance levels. And remember, we looked at diagonal market geometry. That is the best way of looking at the markets, and this is the best tool for doing just that. So we're going to look at how I discovered the BECK'S emblem. In 2009, I was publishing a newsletter called the GARTLEY Trader. The GARTLEY Trader newsletter was a publication that came out on a weekly basis with trade recommendations in various markets, Forex, futures, equities, etc. And so through the process of using technical analysis in this publication, you can see as time goes on the discovery of the emblem in the process. So to start off, when I was publishing the newsletter, I was using the vertical geometry tools that we know about already, the retracement and the extension tools to identify those GARTLEY patterns. However, I was looking at geometry and trying to find ways to incorporate those simple shapes of the circle, the square, and the triangle into our analysis to improve the results of the GARTLEY. So let's look at the first technique that I used as an add-on to our GARTLEY pattern trading. I was using Dynamic Trader software at the time, so this is a chart created by Dynamic Trader, and this is a trade setup for the British pound. It was a 60-minute chart. It was from the GARTLEY Trader publication, April 27th, 2009. And if you notice, I have a bearish GARTLEY pattern here, A, B. I was labeling it as an ABC correction in L8 wave terms at this point. You can see the L8 wave labels. I've gotten away from that. And this is clearly going to be our area where we're going to be a seller. You can see some of the other tools that I was using at the time were the Anders pitchforks on the ABC correction. But I want to draw your attention to the fact that what I was doing here was using a GAN box on the first impulse down. The XA leg, I was drawing a GAN box on that leg down, and I was reflecting that box over here, and the expectation was that if there's going to be a reversal, a bearish reversal over here, that it very well could take place at this time, horizontal market geometry here, at this vertical line, there's an expectation that there would be a reversal. As time went on, I started to realize that sometimes the reversal would happen outside of that time frame, and it was kind of confusing for me because I was under the impression that this was a really strong indication that there'd be a reversal when these two, the impulse and the correction, when the impulse and the correction are equal to each other, often there's a reversal, but a lot of times there wasn't. And so I was testing this out. I was using these boxes and with mixed results. I was kind of disappointed with this. So let's move on. The point I'm making here is that I started using a square, which is an integral part of the BECK'S emblem. On August 3rd, I started using an arc instead of the squares. And the reason for that is because if you look at this, here is an impulse from the high to the low. And then we have this correction here, A, B, C, or AB equals CD. And we're looking for a reversal here, as this would be a bearish Gartley pattern complete in this area here. I was using the arc. I was drawing the arc as this was the center of the arc at the A point. And you go to the X, and then you swing that arc over to the right here. And the assumption is that this correction should take place inside of the arc. We're starting to make progress here because remember, in the BECK'S emblem, there's a circle there, or a dyad, if you will. And I came to the conclusion that the correction would have to take place inside this arc. If it went outside the arc, the trade would be invalid. So we're starting to come up with some good rules here. Not all the rules necessary, but starting to go in the right direction. So in August, I came up with using the arc instead of the boxes, and this helped a little bit. Now, this is when things really changed. We move into October 9th, 2009, and this is the first time I really came to the conclusion. I was looking at those circles, those dyads, putting them on the screen. I was putting the boxes on the screen. And then it came to me as I was wrapping up, finishing my Gartley trading method book, that, oh my goodness, maybe we should put these symbols right on the chart. Maybe we should take that GAN's emblem and put it right on the screen. But how would you line up the impulse of the XA leg with any of this? And I came up with the idea that really what you need to do here is, you notice what I did here. Here's the X and here's the A. And I lined up the side of the tetrad, or that square, with those 2 points. And so this was a big breakthrough with the publication of this in October of 2009. Still a little murky. Do you notice that I don't have all the triangles there? I just have the single triangle that the GAN emblem had, or the Jones emblem, if you will. But starting to make some progress here by putting the GAN emblem right on the screen. And you notice that this line here, that there's definitely some support right here. I apologize for the resolution of these images. I am recording these images in 1080p, and I'm trying to fill the screen, but these images were back 5 years ago from this newsletter. I pulled them out of there. I wanted to give you the real images. And So that's why they seem to be kind of off base here. But anyways, this one is from the Gartley Trader, November 30th, 2009. But this was once again an important date, November 30th. This is the week that we came out in the Gartley Trader newsletter with the BECK'S emblem. I finally got it together. I realized that we needed to add those 2 additional triangles to GAN's emblem to get these angles that we're looking for. These diagonal geometric angles that we need for diagonal market geometry. These are the best angles. They replace Fibonacci levels. We don't want to use vertical market geometry. We want to use diagonal, and that's what these lines are. And you'll see over and over the 52-degree angle, we'll be covering that off here shortly, is so important. And you'll see the relationship that that has with a lot of other things in history as well. So this screen here is showing us a trade setup. It's a Forex trade, the pound-yen cross. And the boys at Market Analysts helped me get this programmed into the software so that we could make it really easy to find trades with the BECK'S emblem. Now, it's interesting. When I came up with this idea, is right in the midst, I was just about ready to hand over the final copy of the Gartley trading method to Wiley. And I talked to my agent and I said, look, you know, there's this information that I've discovered and I don't know what to do. Should I include it in the back of this book or should I make a whole completely new book? And he kind of didn't say much because I don't think he really knew what I was talking about. So I just thought, what the heck, let's just put it in there and we'll include that as an appendix at the back of the Gartley trading method. So I decided to call it the BECK'S emblem. Why? Because everyone was calling that other emblem the GAN emblem. So rather than calling it the symbol or the circle or some other name, I thought we'd stick with emblem. It is an appropriate term to reference this. So the important point with the emblem is that what we want to do is line up the tetrad or that square starting with X to A, and then that generates the angles for us to determine where we're going to be buying and selling. So we're going to break the BECK'S emblem down into its constituent parts, starting with the dyad. The dyad is the pattern limit. We expect the pattern to stay within the parameters of the dyad. If it spills outside of the dyad, the trade is invalid and we're not interested. We want to take the trade as long as it stays inside the dyad. So we call that the pattern limit. The tetrad is the Greek for 4. We're using these Greek terms here instead of saying 2, 3, and 4, circle, square, triangle. The tetrad is the square, and that represents the correction limit. After it passes the 90-degree angle at the A point, we want that correction to stay within the tetrad. That will be related to our discussion about time and price scaling later. But the correction has to stay within the tetrad. And then finally, the triad is actually what gives us the entry signal. Once the market has touched one of the angles that has already been determined to be the level of support and resistance that we expect, we're going to use that as our entry signal, the angle generated by the triad. So let's have a look at a few charts here. This one is a bearish Gartley pattern. As you can see, there's an impulse coming down, and then that correction going up here. You can see a deep retracement, probably around 786, but this time we're going to do it differently. We're going to use the emblem, and as I mentioned, the dyad contains the pattern. We can see this after the fact that the market turned down, but if this was the signal to get in, it clearly was still within the the maximum dimensions of this dyad. So once again, the limits of the pattern will be within the parameters of this dyad. So what else do we need to add here to have an emblem? We're going to have to add a square or a tetrad, right? And what does the tetrad do? That's going to define the limit of our correction. And you notice as we go here, the correction is bouncing up against the side of the tetrad. And we're going to see that happen a lot. We're going to see that a lot. See how that's the limit of the correction, that tetrad contains that. We don't want to see that price action way down here. We want to see that inside the tetrad like this. Now the 90-degree angle here generated by this tetrad is of paramount importance. Angular relationships in this pattern that we have to focus on. It absolutely has to be there. And one of the reasons it's been noted from a number of GAN practitioners, one of the best ones out there is Michael Jenkins. And he said 90 degrees is the strongest angle since it defines the sides of a square. And getting away from that angle means getting into a new cycle, and that always results in strong changes of trend. If you haven't already got a copy of The Secret Science of the Stock Market by Michael Jenkins, I'd strongly recommend that you pick up a copy of that book. It's excellent. The other thing that's important about the tetrad is how it will make an allowance for time and price dependent on how quick the impulsive move is. So for an example, look at this move here from this high at X down to A. It comes in at a certain speed, and that speed will have a relationship to how fast this correction plays out. So if this was a really steep angle here from X to A, then just think about this square would rotate, this tetrad would rotate inside the dyad, and then this correction will be even more shallow than what it is now. Or conversely, if this was a shallow impulse, what do we expect? We're going to expect a very steep corrective sequence. And so that's what's so useful about the tetrad here. It's going to dictate how fast the correction will be. If this is a steep decline, it's going to be a shallow correction. If it's a shallow decline, it's going to be a steep correction. So you'll see that over and over, and that really is what's dictating the relationship between time and price, is what's happening with this XA leg. So we've added the dyad, the tetrad, and now what do we have to do? Well, as I mentioned, we've gone through the exercise in the appendix of the Gartley Trading Method book, how to draw the lines, but it would be a simple thing here to draw a triangle to make it a GAN emblem, but we know that the BECK'S emblem includes more than just the one triangle. We add two more to it so that it looks like this. Now, what was really fascinating about this process was how uncanny it was that these reversals take place at this angle right here. We'll see here in a minute. It's called the 52-degree angle. And this is very common. This is one of those classic trade setups. And now that we have the whole emblem here, see where the dyad is on the outside. Look at how there's respect here to the tick with the dyad. Remember, we want the correction to take place inside the parameter of the dyad, and it did reverse. It didn't go past this. If there's a vertical line here on the right side of the dyad, the high wasn't made after that. It took place before, inside the dyad. That's what we're looking for. Look at the respect here, moving on to the tetrad, how it bounced on a number of occasions off this line. So this 90-degree angle, as I mentioned here, is of paramount importance that we have that. And once we've determined the dyad, the tetrad, we can draw our triads. And like I mentioned, this one here is really important. After I discovered adding these triangles onto the GAN emblem, I had to have a look and see what the angles were. And that's when it got really interesting. So you see here, if there's an imaginary XA leg from this corner of the tetrad up to 0 here, that would be a 0 angle. This angle here, based on that impulse, would be 15 degrees. This angle here would be 26 degrees. This one here is 38, and so on. We have all the angles displayed here, and then of course the 90-degree angle would be here. This is 90 degrees in relation to this 0 angle here. A 45 would take you right down the middle. And it's interesting, from observation, the 52-degree angle is the magic number, just like it is with Fibonacci ratios. Remember, in the Gartley trading method, I said of all the different Fibonacci ratios to use, the 786 seems to work the best. And I found that this is the case with the BECK'S emblem. The 52-degree angle is the one that works the best. The other ones do work, but not like this one. This is the ultimate angle that you want to be using all the time. And as I've said before, if there's one angle that works better than the other angles, or if there's one fib number that works better than the other ones, or if there's one indicator that works better than all the other indicators, why use the other indicators? I want to use the best one, and so that's why I'd point you in this direction. Yes, there are trade setups that use the other angles if you wish, but the 52-degree angle one is the best trade setup. The 52-degree angle number shows up in history. It's part of what's called the Kepler triangle, or the pyramid triangle. Interesting relationship. I'll show you a picture here in a moment. But the 52-degree angle is found on the face of the Great Pyramid of Giza. And rather than spending too much time on this, I'd recommend, if you want to do some research, go ahead and type in Kepler triangle in Wikipedia and have a look and do some research on this topic. It's absolutely fascinating. Totally related to Fibonacci ratios as well. See, the inverse of the 52-degree angle here is this angle over here. And that's a Fibonacci number, isn't it? 38. So these two angles, of all of them in the BECK'S emblem, are the best ones. But as I mentioned, if I had a choice between 38 and 52, I'm going to go with 52. So at the end of the day, if you don't want to clutter up your chart with a BECK'S emblem, this is all you need to really look for. So here's the impulse. This is that same bearish trade setup that we've been looking at, that we put the emblem on, but starting from this high down to this low. After we hit the low, there's going to be this correction. We just got to make sure that this is a 90-degree angle here. The tetrad was doing that for us. When we put a tetrad here, that corner of the square or tetrad forces us to have a 90-degree angle there. And as long as our corrective sequence starts bouncing off of that, that's good. You'll see how the quad fits into this equation in the next session. But once we have that 90-degree angle, we can go back here and follow this line back to the X point and say, okay, what's a 52-degree difference from this line that I've just drawn down to the A point? And if we calculate 52 degrees from there, then this is our trade setup line. This is the magic line that we want to use. And you see that would have been where we'd be selling right there. So those are the two magic numbers that you're going to be looking for in regard to your trading. 90 degrees and 52 degrees. as I mentioned, this relationship of 52 degrees in the Fibonacci numbers, phi, 52, 38. It's all over the place in sacred geometry, in architecture. It's really quite a fascinating subject. So rather than me talk, I'm just going to show you a few images here, and I'll leave it up to you if you want to go down this rabbit hole. All right, so now that we've covered off the discovery and the relationship with things like the pyramid and Kepler's triangle, we're going to move on to how the BECK'S emblem is related to the Gartley pattern. What we're going to do is look at a bearish example here of using the vertical market geometry of the price retracement and price extension techniques. Looking at this trade setup based on what you know about the Gartley pattern, you would say, what I'll do is I'll wait until the market goes up to 78.6, which is right here, and then I'd sell if the market touches that line and goes down. So let's add some bars and see what happens here and see if you got filled on that trade. So that one, you would have missed it. You would have done your analysis in advance. You would have confirmed, yes, the 100% is close to the 786. The price extension is close to the retracement. I'd be looking to be a seller at 149. Well, the market never went there, did it? Sometimes you look at things like this and go, well, maybe something else is going on. Well, you know what else is going on? It's the emblem. If you put the emblem on top of this, you'll see what's going on. So let's do just that. Let's put the emblem on top of the same market. Okay, so here's the same situation. So we've applied the emblem from X to A. And we can see that the market is bouncing off the tetrad here. And as it starts to go up, remember I said my favorite line is this one here, just past the middle mark. Just past the middle mark is going to be your 52-degree angle. So the market actually went up and touched that line and closed on the low there. Do you remember the 78.6% line was actually beyond the 100% line? It was over here. So the market reversed well in advance of getting up to that retracement number. But it reversed on a dime right on that 52-degree angle. Let's add some more bars and see what it looks like. So there you have it. This is one of the reasons why you want to use the emblem versus the horizontal market geometry of the retracements and the extensions. And just a reminder, this is new information. I don't expect you to jump on board with this right away. If you know and love the horizontal market geometry, that's okay. Keep using it and overlay the emblem on top of it, and you'll eventually build enough confidence that you can let go of the old technology and start using this because it's just a bit more accurate. You can still make money with horizontal market geometry. There's a complete trading system in the Gartley trading method book. You can use that and you'll be fine. But if you want to tweak it and make it a little bit better, this is where you want to go with the diagonal market geometry. And there's also got to be expiration dates on these trades. And that's the one thing that was driving me crazy with the Gartley pattern is when you have those horizontal lines extending off to the right into the white space forever. So that's why this correction has to complete inside the dyad. If it goes outside the dyad, we're not interested. Okay, so let's move on. Let's look at a number of different BECK'S emblem trade setups in different markets. In the Gartley trading method book, you would have learned about the TCG and the TRG. TRG stands for Trend Reversal Gartley, and TCG stands for Trend Continuation Gartley. There had to be a way to define what type of Gartley pattern it was that we were looking at, especially when you go to Gartley's original material, because he was really talking about a Trend Reversal Gartley. Now that we have the angles, and now that we know we like the 52-degree angle, rather than looking for TRG 786 or TCG 786, we're now going to call them TRG 52 or TCG 52. Or if you want to make it really simple and not really define whether it's reversal or continuation, just call it a bullish or bearish 52. It's going to be that simple. One of the important aspects of this tetrad, one of the rules that we want to use is when you put the emblem on the chart, this corner is always going to be at X and this corner is always going to be at A. If this was a bullish trade setup, the X point is always going to be here and the A point is always going to be here. Now, as long as the tip of the tetrad over here is above the origin point, then we have a valid bullish 52 for an example. Likewise, reverse the rules for bearish trade setups. But remember, the tip of the tetrad has to be pointing in the direction of the trade. Sometimes it does not, and you do not want to take the trade when that happens. I do mention that rule in the Gartley Trading Method book in the appendix as well, so I just wanted to remind you about that. Now, as we go through these different examples, I want to remind you that I publish these trades in advance for our students at Geometric Trading. So these are real ones. Of course, I'm going to go and cherry pick all the good ones out of the bad too, right? But I just want to let you know I did make these calls in advance. So here's the first. It's an equity trade, HIG. We have the origin point over here, the seed of the movement, the X point. We line up the side of the tetrad with that impulse on the way down to here, which is the A point. I don't even put the labels on because I'm sure you guys know what they are by now. But do you notice how the market responds to these angles? It gets up here. That's your B point. It comes down here, bounces. Look at the support here on the tetrad. As it moves higher, it gets up to the 52-degree angle, and lo and behold, it reverses here. The reversal takes place inside the dyad. Remember, the tetrad contains the correction, and the signal is generated by the triad right here. Let's look at another one. Here's a bullish 52. This is dollar Canada, Forex, X, A. We have some respect of this angle here. Bounce off the tetrad. We have some resistance here on this one. Here at the tetrad. As it starts to move lower, we have it bouncing off the 52-degree angle, and then it takes off. The reversal takes place inside the dyad. The correction is contained inside the tetrad. The trigger is the triad right here, 52 degrees. Here's another Forex trade, the Australian dollar. This would be one of those TCG 52s. Here's the X point. A, you can see it's a calendar day chart. And the tetrad is containing the correction here. It bounces off the tetrad. It comes down and it hits the 52-degree angle. And look how it bounces off this repeatedly. And right when it gets to the outside of the dyad, time's up. Boom, it takes off after that. That is amazing. Australian dollar, the low, the high, a bullish 52, almost to the tick. Lines up perfectly with the tetrad right here. Finds a little bit of support here on the 38. Comes down, it hits the 52. This is going to be your signal to buy. And the whole pattern is contained within the dyad. The tetrad contains the correction and the trigger. The setup is complete on the triad right here at 52. Bullish 52. Now this is a little bit different. It's a bullish 38. I had to throw some variation in here. Like I said, my favorite's 52, but it does happen on the other angles as well. It's a 38. This is Microsoft. Here's the X. Here's the A. Now the interesting thing, a lot of students will say, well, where is the X point? Where is the A point? You'll start to see where the X's and the A should go based on this dyad. So you can see it got through it a little bit. It contained the price action over here. The real high that the A point is supposed to be based on is over here, not this one. Then we have the tetrad contains the correction. It comes up, it can't break through. Here we got that 90-degree angle here. We have to have that. And once again, we have a bullish 38. We're not going to 52 over here. We're at 38. And you'll see as we look at the quadrilateral in the next session, that quad is going to tell you which angle these markets are going to be bouncing off of. So you'll know in advance if it's going to be a 38 or a 52. And you see to the tick right here. This is your reversal. Your order would be filled here, and the pattern is complete at this point. The pattern is contained within the dyad as the market breaks out here. Okay, back to the 52s. We've got a bullish 52 here, Microsoft, low to high. Comes down here to 38, bounces off the 90-degree angle, the tetrad. Wanders down here, we find support at 52. Remember, we have an expiration date. As long as this happens inside the dyad, we're good. And this is the day. Takes off, doesn't look back. Here's a bearish example, a bearish 52. This is dollar Canada. Here's the high, here's the low. We have respect on this angle here. Support at the tetrad. Tetrad is containing the correction. It runs straight up and stops here at 52. Pattern is complete at this point. And some students will say, how do you know it's 52 versus this? Well, the one, depending on the direction, the next angle after the halfway point would be that 45. The next one is going to be your 52. So this is your 52 here. And you can see just by looking at it, if you were going to put a price extension on this, you would see that it would be telling you this is probably where you want to be. Here's another one. From a low to a high, X to A, support, tetrad contains the correction, comes down, goes through the 38, stops here at 52. This is where you want to be a buyer. Pops up, and we know that even if it did come back here and you would have been stopped out, maybe, depends on the rules that you're using, but you would have made money anyways. If you're using single in, scale out methodology as described in my book, you would have made money at this point. The market does go higher substantially as we go forward after this trade took place. And if you did that single in, scale out with a third contract or a third lot, that would have kept you in for a while. So let's just review what we've covered off on this session. The BECK'S emblem is the best tool for diagonal market geometry. The angles from the emblem replace the Fibonacci ratios. The emblem was an evolution of the Gann emblem, the circle, the square, the triangle. We've added 2 more triangles, and this has given us that magic 52-degree angle that shows up in the Pyramid of Giza, is related to Fibonacci ratios and the square root of Fibonacci. And remember that 90-degree angle as well, how important that is. We looked at how the dyad gives us the limit of the pattern. It has to complete inside the dyad. Does the tetrad contain the correction? Does it have that 90-degree angle? And does the correction stay inside the tetrad? And then finally, does it hit the 52 or the 38 or whatever angle else that you're going to be looking at? My preferred number is the 52-degree angle. And that's generated by the triad, or that one of those 2 triangles that we've added to the Gann emblem. So in the next session, we're going to discuss quadrilaterals. So stay tuned. We're going to combine quadrilaterals with the BECK'S emblem. I'm sure you're really going to enjoy it. We'll see you in the next session.